common questions we get is trying to understand what the LVR and what LVR restrictions are and your usable equity. So what is LVR? Well, it's a loan to valuation ratio. So it sounds confusing, but basically it's amount of loan you have on the value of the property, and it's trying to figure out how much usable or how much equity you've got in the house. And then basically what the way this came about is the bank's trying to, or the Reserve Bank trying to limit lending, especially for property investors. So what does this look like? When you're working out your LVR, basically you take your mortgage over the value of the property. So this is really important to determine whether you're using the GV or the RV, or you're using like an eval. There's lots of different valuation types. We cover that in a different video. So basically, let's have a look using some numbers. Let's say your mortgage is $650,000. Your house is valued at $950,000. So what you do is you take your 650 divided by 950, you get 68%. So this person's LVR on this property is 68%. Now let's say people are asking this question, the reason I'm asking about LVR is because I need to borrow more money. So generally speaking, on your owner occupied, like your family home, you can go up to 80% LVR. What that means is you need to keep 20% equity in the house. And this is so the bank always is, if the properties dip, they've always got a safe buffer if they ever have to mortgage, if you go on a mortgagee sale. It's basically to protect the bank, but it's also to protect the market at whole if there's a bit of dip, that there's not a massive rush of houses for sale, which can bring the values down even more. So let's say you want to top up your mortgage, you want to go on holiday, buy a car, consolidate some debts. This is why people refinance. And in this case, a $950,000 property, it's your family home, with the income servicing getting a tick, you can go up to 80% lending. So in this case, it's $760K. So to figure out the usable equity, what you do is you take your house value and times it by 0.8, 80%, and this is that $760K number. So if you ever got any questions, or you're a little bit confused about your current equity or usable equity, or you just want to figure out your LVR options in terms of buying more properties, just flick us a direct message on the website or send me an email, andrew@irefi.co.nz. We're happy to do those calculations for you, as long as we know why you're trying to free up that extra money and what you've got planned. So generally speaking, it's the property investors that are asking, but if you're just trying to figure out on your family home, 80% is usually the number. You can go higher using non-bank lender, so you can talk to us about that, about second mortgages or caveat loans or personal loans as well. But for the purposes of this conversation, LVR is the loan to valuation ratio, and it's generally the mortgage divided by the value of your house. And generally, it will be under 80%.